Good afternoon, ladies and gentlemen. Today I brought out the casting couch because I'm going to talk about some stocks that have gotten absolutely smashed, along with the trades that I've taken on those stocks and a potential future trade that I'm looking at and starting to execute at the moment. So without further ado, here's the intro. So guys, these are all option plays that I've taken. They're all buying puts, so getting exposure to the downside. And before I get started, I just want to say I'm not a financial advisor, so do not take this video as financial advice, nor am I recommending you to buy, sell, or do anything with any of these stocks that I talk about today. Consider it as education and entertainment purposes only. So starting off with BHP, we have a stock here. As you can see, it topped out at around 50, but if we take off this adjustment for dividends, this is what the actual stock price looks like. So it was around $54.35 where it topped out on the August 4th. But if you adjust for dividends, this little button here on TradingView, it makes the chart look a little bit better, and it takes away the dividend component where things gap up and down really heavy. So I tweeted this out on August 5th that I bought BHP puts the day before, and of course it started crumbling down. Now I just want to talk about some basic technicals that happens at the big end of town typically. So usually anything over 5 billion market cap tends to have a trend or a recurring pattern about topping out. Very rarely do we see a top out of an up channel just go straight down. It just doesn't really happen. So what happens is pulls back, goes for a retest of the highs, and then starts to come off. That's what we typically see on the third hit of a trend line, and that's going to be a bit of a pattern as we look at the other stocks going forward. So what we have here on BHP is a top out, and you can see the selling that happened around here, and that was because iron ore was coming off quite heavy, right? There was some negative sentiment around iron ore, and BHP actually took quite a lot of time to come off. So what happened was after buying the puts, it came off very strong. So you got a move from about $50 down to 47 and eventually 43, and then a bigger tank. So what happened here on this day with the big gap down was unexpected. This was trending down irrespective of the news that came out. And from memory, it was something to do with BHP going green or something to that effect. I don't actually recall the news, but irrespective, that was the trade that I took for BHP, picking the top basically. Something I don't typically like to do, but if I have a fundamental conviction behind the reason, I'll typically buy options and front side, because then I give some leeway to actually make profits on the downside rather than just selling the actual stock, right? So with this one, I think it was about a month of expiry, and I had a pretty strong conviction based on the iron ore price and the super laggy nature of BHP and other iron ore based stocks as well. Flight Center, this was really fundamentally driven. The day after I tweeted this, it started collapsing. So not to suggest I caused the collapse by any means, because I've only got like 4,000 followers on Twitter, but the point is the market caught up with what was happening here. And you can see this is year on year on year. You can see the total revenues, the gross profit, and the EBITDA. So the blue, black, and green bars. And you can see just the impact COVID had. And what happened on Flight Center, I also tweeted this out, was around this time here. I messaged my broker and I asked why shorts are not available, because it's unusual for a stock of this size with this many shares on issue to not have any shorts. It was very unusual. And the response I got back was that the lenders want to hold onto their shares until the annual general meeting, so the AGM occurs. So the day of the AGM, the stock absolutely plummets. And that was the plan, right? I've been planning this trade for a while. It pops up to the upside, and then the AGM occurs. The AGM didn't occur on this date, I don't recall. But basically when the AGM did occur, massive amounts of selling, and that's as a result of just the shares coming back online available for shorting. And of course you got an exacerbated move to the upside. So what we have is, again, 1, 2, and 3. So we have this move here. Remember when I said it just doesn't go up and straight down? It goes up, comes back, and then tries to make another move to the upside. And I had a tweet as well, and the market cap, by the way, big deal was the market cap. If we zoom out, we can see Flight Center, pre-COVID, same market cap. Share price is different, as you can see. And that's because they did capital raising, so they diluted the number of shares on issue. If I recall, it was roughly double. So yeah, so roughly this is trading at about $40 pre-cap raise. So the market cap was almost the exact same. There was a huge lead up into this massive buy the rumor, sell the news event, which was that the borders were opening and flights were going to be back up online. Now, people might be saying, oh, we got lucky because Omicron, or whatever that variant is, but that actually happened here, right? So this happened around here. And this is the recovery day on Monday, where there was just basically a one-day massive sell-off, and that was on this day before. So that's kind of what happened there, was just a massive buy the rumor, sell the news, a huge event leading up to the shares coming back online. You got an exacerbated move to the upside for absolutely no reason other than the fact that there were no shorts available in order to basically bring this stock back down to reality. And what you end up having is a very significant move to the downside, just a downswing based on what I'd argue is common sense, right? Bringing the stock back up to this market cap pre-COVID is like anticipating very, 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 very strong growth. Not only do you have to make up for the losses for the last year and a half or two, but the company, or based on the market cap, you're also factoring in extremely strong growth for travel. And that's just not a reality, at least not in my eyes. So hence why that was also an extremely profitable short. BHP, this one pre-COVID was trending really nicely. COVID hit, and then we can see the very, 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 very strong recovery for the last 2 years. Back on margins, I believe it was, very strong margins, a lot of property sales, a lot of home loans. But what we have is pretty much a sell-off that happened and ended up getting puts on this day. I got, let me see if I have my notepad actually. Got my little notepad here. And it's one of the top things that I've got. CBA 17th of November puts for the bank. So got my notes. I don't actually recall why I wrote that down. So I had to go back on the day. I was like, do I buy puts for any bank or just CBA? So I came back and realized that the quarterly, I think it was the quarterly or the half year, was coming out that day. Now, I recall what happened to WBC, and it was absolutely shocking. A monstrously negative result. I think it was NAB. NAB had a very, very, very bad result on this day, but it had a share buyback. So the company was buying back its own fucking shares. So of course it wouldn't sink. I think they were buying 15 mil or something like that. Off the top of my head, I don't actually recall the exact amount, but they were buying back their shares, and that's what caused the stock to basically go sideways, if not a little bit green after the financial, the earnings, which in my eyes weren't actually that good. So we've got Westpac, we've got NAB getting murdered, and then we come back to CBA, and to me it looked like common sense. It's like, this thing's gonna get fucking melted. First of all, we're trading at all-time highs well above pre-COVID levels on anticipated margins that simply cannot be sustained. Profitability that cannot be sustained. Right? It's factoring in and building up net profit and EBIT and margins to levels that the market just can't continue. So that was my basis behind the short here. And this ended up being an overnight 14 bagger because my options were 2 days expiry. So this was absolutely degenerate. It was either going to work or it wasn't. So it ended up being 14 bags. It was $106 puts, meaning it had to be at this level here to break even. Well, plus the premium that I paid, which I think was 30 cents, maybe 35 cents. So it had to get around $105. Let's just say 105.60 just to make it simple. And that's where the puts had to close in order for break even, around this level here. And then it just absolutely monstered to the downside. Because it was 2 days expiry, I closed a lot of it around this level here, and then closed out the rest around here, around this $101 level, I think it was. Overall, about 14 bags of profit because of the short-term nature, right? So, you can't get 14, typically you can't get 14, 15 bags or something like that on the back of 1 month expiry options. It's just too far out, they're too expensive, and it requires a serious amount of price movement in order to get those kinds of gains. So that was a degenerate kind of play. but it was on the back of some fundamentals and some obvious expectations that I had of both the company financials and the banking sector as a whole. So to me, that was a very sort of obvious kind of trade. It's my second best options trade ever, I think it was. I remember what the first. I remember the first one would have been the Afterpay one, which I made a video on. 88 bags, I think it was, that I missed out on by one tick, but I won't go into that because that's a painful memory. And now what we have, keeping all this kind of basic technical analysis in mind, you've got your third top out here of a channel. You've got your third top out here on Flight Center, and CBA almost certainly would have come back and swung back up and retested one more time. But the announcement came out, so that kind of put a dent in that idea. Otherwise, if there was no financial release coming out, I would have waited for a retest one more time and then shorted it, and then maybe hit the bottom of this trend somewhere here at 104, something like that. A highly exacerbated move above pre-COVID. And now, what I've got is LYC. This is a fan favorite stock. Now, I'm not saying that I'm 100% accurate in all my options trades. I'm just telling you about the ones that share some similarities to this company. And I kind of want to bring Novonix into this as well with the financials. I believe I tweeted out Novonix's financials, and then you can see the absolute meltdown that Novonix had based on nothing but purely its financials. Technical breakdown, no news on that day. It was just a massive technical breakdown. It just overshot, and there was no options for this one that I'm aware of, but this was another short play that I was looking at, and the financials are really, really, really fucking bad for Novonix. And what I see is some similarities with LYC. Now, not as extreme because, the equity position's better for LYC. LYC is turning a profit, but I'm seeing the exact same things financially with LYC that I was seeing with Novonix, that I was seeing kind of with Flight Center, again, in a different sense. So what we have here is LYC's market cap, along with its revenues for every half year, right? This is from start of 2017, start of 2018, 2019, 2020. And what we have basically is you can see the market cap in red, and you can see just how exaggerated this move is, just purely from a market cap perspective. So we're going to take a look at 2017 for LYC. And what are we seeing? We're seeing the exact same setup, almost kind of like Flight Center, kind of like CBA in a sense, in the fact that, it's got 1, 2, 3, except we're coming back for a fourth move. It attempted to sell off, but this was the Omicron day, if you remember, that I was talking about with Flight Center. This was the Monday where it recovered, like every stock did a gap down and recovery that day. And then, of course, a nice technical swing to the upside. And what we've got is a bit of a parabolic move at the moment. So here's your pre-COVID levels. Here's your 2017, 2019 level that I was talking about. And again, here are the financials for that. You've got a range from roughly 1 billion to 2 billion or just under 2 billion. And today we're sitting at 9 billion market cap, right? So if I bring up this chart on Wednesday last week, which was 8th of December, the market cap grew more than the revenues, the total revenues for the year for LYC. Right, just keep that in mind. So here's the market cap chart. You can see the valuation. Here we are back in 2018, 2019, and then this massive move to the upside. Now, of course, you might be wondering, well, there's obviously a reason for it. Yeah, fundamentally, there is a drive, right? Big sentiment push. We have neodymium and praseodymium. I believe that's how it's pronounced, right? The two core rare earth metals that are moving really strongly as a commodity in terms of pricing, and that's heavily just because of China, right? The story is Lynas is the second biggest producer, it's the biggest producer outside of China for rare earth metals. Rare earths are in demand. China's putting a limitation on supply. You've got China power issues, so China isn't supplying as much of these rare earths as they could. So supply is going down, demand is going up. You've got, obviously the price of NdPr, which is neodymium and praseodymium together are going up. I think they're like up 100% for the year. But what we have is an extremely exaggerated push on the market cap. So again, this is my opinion. I'm not saying this is definitely going to sell off or anything like that, but it's my opinion that this is selling off, is going to sell off rather. So I bought my puts on Friday last week, and I believe it was Tuesday last week as well. So it was on this day here and this day here, roughly at the same share price at around $9.25 is where I bought puts. Got $8.25 for 1 month, and I'm looking for $8.50 for 2 months, I think it is. So I'm building a position short, and that's my plan. And my play really is on this exaggerated move above a massive channel that's already been stonking to the upside. That to me is an exaggerated move. Financially, it's exaggerated beyond reason. You know, the stock price is up like 600-700%, and the revenues are up 60%, and the rare earth metals are up 100%. So there's a massive difference between the reality of the stock, and you know, we won't know the exact numbers of Lynas. So what the estimate is, you know, you'd have to double this candle here. This 286 would have to be like 600-700 million. Like, it'll have to be like a massive move to the upside when the next financials come out in order to just even like closely justify this stock's price action and movements. Now, I'm not completely 100% aware of the details behind the stock, and I don't need to be, right? The decision to short Flight Center, CBA, and BHP, they weren't on the back of in-depth analysis that I've spent hours and hours and hours or countless days doing. These are simple financials, and then just looking for the technical reason to short these stocks for the fundamental reason of being overvalued, in my opinion, right? It's not overly complicated. It's not overly technical either. It's really simple technical analysis. So technically, I did front side this one a little bit. So I didn't actually find the technical reason on this day. Let me zoom in. Let's say the 2-hour chart. So I did see it was starting to sort of roll over a little bit. It was kind of getting weak. So I decided to get some entry into my puts. But, you know, it wasn't like a high conviction based on the technicals. But what we have is we're finally seeing some sort of negative divergence. And again, negative divergence is not in of itself a reason to short stock or get short exposure. So we have a top out and a top out on highs and new highs. So you can see the flow of money is to the downside with negative divergence. That's the idea behind it. And yeah, that's the idea of the trade. You know, I've got puts. I'm looking for a downside move and a pretty sharp downside move. If you're looking for my sort of target, or what I'm looking for a target, probably the bottom of this trend line would be reasonable. And even at this level, I'd say the stock is overvalued. But LYC does have the story behind it, right? It has the story of being the biggest producer outside of China. It does have the China story. It does have the rare earth story that's really strong. And effectively, that's what has driven this entire stock to the upside for so long. But you're wondering, well, why not? You know, why not short here if it's so overvalued, or why not short here or here, or literally at any point in history? Why today? Well, it's technically driven, right? We've overblown this trend line. It's gone into like almost a parabolic phase, and it's very similar to Flight Center in the sense that it overshot for no reason. You know, I don't think there's any fundamental reason that I recall seeing for this to actually occur. It's just a technical pop. And I'm expecting a technical rejection just from a fundamental perspective. So again, not actually shorting the underlying stock, just getting short exposure via options and puts, and targeting sort of 8. And I don't think this is unreasonable at all. Targeting 8.25 is the strike price here, and then 8.50 is the next strike price for an extra month out. And I think in that time frame, obviously, if this lingers and goes sideways at $9 for the next month or so, a month or two, then obviously these options are worthless. But my expectation is just a sharp, rapid drop from a technical perspective and a fundamental one, and sort of all those reasons combined together, expecting a sharp drop. And if not, then so be it. I'm by no means a crystal ball. I'm just playing the odds here, and I think the odds are heavily in my favor. So that's my opinion on this stock. I'm actually a fan of Lynas. I'm a fan of what they do and just the company in general. I'm not by any stretch of the imagination thinking that Lynas is a bad company and that's why I'm shorting it. I'm simply shorting it because I'm of the opinion that it is highly, highly overvalued. If I was to guess the fair value, I'd put it at around $5. That's just my opinion. I think $5 in any short time frame is simply unachievable. I don't think, however, dropping to $7, this sort of horizontal here, I don't think that's unachievable in the short term. I think that's actually reasonable in the next month or two. Hence why $8.25 and $8.50 options in order for it to hit around $7.80. That's kind of my target. How it gets there, I have no idea. I have no idea how it gets there. That's a matter for the markets to decide, but I think the odds are very heavily in my favor. So guys, if you found this content useful at all, please do consider hitting that sub button. I'd appreciate it a lot. Otherwise, guys, I'll catch you next time.